Hey, this is Justin with DayTradeTheMarkets.com, and I wanted to do a brief video and talk about a technique that you can use to really get a good handle on the direction of the market, especially early in the session. And it's also a really good strategy that you can use around major news events. Now, the chart I've got from today, this happens to be a crude oil chart. And this is a 2-minute chart, which is just the time frame I prefer to look at on crude oil. You can look at this on any time frame, from swing trading time frames to micro scalping time frames. But the point being here, in crude oil on Wednesdays, which today was, there's typically an inventory report, and we have a pretty major move. A lot of times you can catch a major move, just like if there was an FOMC report in the index markets and so forth. So this is a strategy that you can use both for getting an early handle on the short-term bias of the market, and also, like I said, when there are news events. And that's to look at the first extreme or major aggression bar of the day. And in today's case, in the crude oil chart, right when the news came out, the first bar of the day was a level 3 or extreme buying aggression bar. Now, when one of these comes out, you have a choice to just jump on board, and a lot of times you will get follow-through. But when it's news events, or especially the first bar of the day, what we typically recommend is let's wait and see which side wins, so to speak. Do we have follow-through higher, or do we have follow-through lower? And in this case, you can see we tested the high by a couple of ticks, and right away rejected out of there. Then, before we even tested the bottom, we started to get what we call level 2 or strong selling aggression, and then we got a few in a row and took out this low. That's a pretty good indication when this battle essentially that was made by this level 3 buying aggression bar, and also the first major bar of the day, that battle was won by the bears. So that's telling us pretty clearly that at least number one, you'd want to be careful getting long in this environment, and number two, you may be looking for some shorts, especially on this this Wednesday. We can get some pretty nice moves in the crude oil market. So that's what it was showing us. So we had the strong selling aggression, waiting for a retracement up to this resistance zone that's red here was a good strategy. That obviously didn't quite get there, but it did decelerate a few ticks before it did get there. Then we had more follow through here with this level 3 or extreme selling aggression bar. Just to give you a little bit of background, these relative aggression bars are kind of the first building block. We have a lot of other real-time, indications as well, and we also like to look at the market on a bigger picture level. But just in terms of this video, let's just talk about the relative aggression bars, because that's kind of, like I said, the first building block. And what this is it's looking at the underlying order flow, the market-driven data, not just looking at price action, but trying to get inside the price bar to really see what's causing price to move, and what causes price to move, what causes bars to move up and down, obviously, is when one side, not obviously, but is when one side, either the buyers or sellers, is more aggressive than the other. That's the only way the market moves, and that's why the market moves, and that's what this software is looking to show you. So it's helping you in real time determine, number one, which side is more aggressive, buyers or sellers, and then number two, the relative degree to which that aggression is occurring. Is it moderate buying or selling aggression, which happens, relatively often? Is it very strong buying and selling aggression, which happens a little less often? Or is it extreme buying and selling aggression, which doesn't happen all that often, but when it does, you better pay attention, okay? So that's what we're looking at, and whether there's follow-through or rejection of one of these bars especially, and especially if it's the first bar of the, the first major bar of the day, gives you a very good roadmap, very good clue as to the likely direction of the market. Also, like I said, can work very nicely in a situation like a news event like an FOMC and the indexes, or like I said, the crude report today. So first major bar of the day is this level 3 or extreme buying aggression. And like I said, when we have an extreme buying aggression bar, we know that it's either the beginning of a vertical move or it's capitulation and the end of, kind of the end of the road. Like if you think about a jet plane taking off that runs out of gas, there's only one way for it to go, and that's the same idea here. So again, we didn't really get any follow through at all. No full bars above. We just, tested above it and came right back in. And then before we even tested the low, we started to get some selling aggression, and the market, with bearish aggression really accelerated through. this kind of key level early in the day, showing us that bears were in control. So you can see that we had pure selling control as these selling bars just kept having follow through. And again, one of our key nice strategies is looking for a retracement toward the high of a level 3 bar. You can see we didn't got up to that one nicely, didn't get up to this one, got up to this one nicely. Didn't get up to this one at least until the end of the day. Got up to this one right away. This one here, however, you can see this wave of 2 of them in a row didn't hold. And not only did it not hold, but it's our first sign of buying aggression. So what is that showing us? Just kind of giving you a little bit more feel for the market at the time. This is a pure wave of selling aggression. Pure vertical selling. Okay. Now that we get some buying with a little bit of follow through, it's not telling us that buyers are taking over, but it's telling us this market, instead of being one-sided dominated by bears, is now more two-sided. You can see we have a bit of a swing back and forth. We test the lows again. We get rejected just like we did on the high here on this level 3 buying bar. This level 3 selling bar on the low gets rejected. We decelerate on the very next bar. We take out the high of this bar 2 bars later, and you can see that we close the day with some buying aggression. So again, the point is not that buyers have taken over when you see this, but it's showing us that this pure wave of selling which happened here has at least become more two-sided or more choppy. Okay. Now you've also got other tools that you can work with. So heading into the day, we were the shorter term bias was certainly bullish, went to very bearish, then went to a little less bearish, and so forth. We've got the support zones where we would expect there to be some support, resistance zones where we'd expect there to be some resistance, and so forth. So a lot of clues that you can use to help you make better sense of the market and ultimately make better trading decisions. But again, the point I was trying to make, or the point of the video was first bar of the day, first major bar of the day, which side wins. That's going to give you, at least early in the day, a pretty good clue as to the likely direction of the market. And that's also something you can use in major news events. So this happened to be both at the same time, so I thought it was a good example to show. So hopefully that makes sense, and you can see how you're actually seeing kind of under the surface as to what's really going on. When you see a gray bar, it's telling you that it's an interesting price movement, but that's all it is. This when you get some strong and extreme aggression, that's showing you these bars, you really better pay attention. There's some major market activity going on at that time. So hopefully that makes sense, and let us know if you have any questions about that. And good trading. Talk to you soon.